Hold on.
Okay.
Hold on. I will tell you when. It might. The stream might have the wrong name today, but better than nothing. Um. Fuck it. I think we're going. So let's just go. Record
Oh,
and go.
okay.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts Joel O'Connor
This is a volatile puppy here, isn't it?
and Dennis Dick,
I've been a penny. I will buy the stock for a penny.
with everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Friday edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel, as always, joined by Joel O'Connor, excuse me, and Dennis Dick. We're not sick today, I swear. No one is sick, not even Dennis. On today's show, we've got a guest at 8:35. He's Shailesh Kumar, the owner and portfolio manager of the Value Stock Guide. But before we get to him, we've got to talk about the movement in tech. Well, of course, the jobs number coming out today, 8:30. Howard Schultz stepping down at Starbucks, and the relentless rally in the financials. Joel, how are we doing in the S&Ps this morning?
A little bit in the red here. I had a little pop off the close, but that was faded. We have not seen the closing price of 92 even yet. That's the big number on the upside. We took out yesterday's low, but not by much, so we'll call it 84 in a quarter level on the downside. Crude, after a couple days of furious rallies here, still above $50, so that's the number we'll be watching for crude here. And keep your eye on gold. Just a lot of times it gets a good move off these job numbers. So just working its way lower, well under 1200 now at 1170. Dennis, are you ready for some volatility on this Jobs Friday?
Well, we will see if we get fireworks at 8:30. Obviously, you get a hot number there, got to be good for the banks. You get a soft number, and that's going to get a little more interesting because I think there's no doubt we're going up in December. It's just about expectations going forward. These banks are pricing like interest rates are going to go up forever here, so they want to see a hot number. We'll see what happens. Obviously, the banks have been very strong here running into the number. If you are having trouble with the stream, just refresh the stream. We've had a few people asking about it. Just hit refresh. I guess you can't hear me say that, though, because you'd be listening to the show. So, anyways, let's talk the tech wreck, though, from yesterday, because talking with one of my friends from New York University there, and we were just discussing last night, and he's like, why the techs get killed today? Why did they get killed? And it's just rotation. They're done selling the bonds for a little while. There's a little bit of exhaustion there. Money's got to rotate. It wants to rotate, keep flying into financials. It wants to keep flying into oil stocks. It was flying into General Motors and Ford yesterday. If it's flying into some stocks, it's flying out of other stocks. And they're looking at what's held up well. But not only that, what was, hot last year? And it was the Facebooks, and it was the Googles, and it was the Netflixes. And a lot of the other tech stocks were pretty hot last year, too. Well, not yesterday. They started slamming some of that stocks. Even stocks like Nvidia. Talking to my buddy Chris, Nvidia at one time yesterday was down 8 points. Here's a stock that blew the earnings away, had been running straight up, so much love from the street, and then just all of a sudden they pulled the rug out from under
You have to sell absolutely everything to buy financials. That
it.
that
That's what it's like. I mean, there's always a sector getting killed because there's so much money rotating into financials.
It's basically sell Nvidia, buy Bank America.
That's
Sell,
what it was.
yeah.
I honestly, I swear, Joe, that's what it was yesterday. People are saying, why are the techs? They're trying to find fundamental reasons for why the tech stocks were selling off. It's honestly people just sell it, and then the ball starts rolling in one direction, and we know when the ball starts going in one direction, it goes very quickly, and then people are like, "Whoa, what's happening here in the tech stocks?" They start ganging up on a little bit, and before you know it, Nvidia is down $8.
Yeah, I could not believe my eyes in Bank America yesterday holding a small lot of the 21 calls. I saw this thing up at 21.94 and I thought I was dreaming here, going up to the next whole number. Uh not only did I, but other people definitely lightened up there. Sold off 54 cents, closed a little bit weak, but considering how much it rallied, let's take a look at some of the other financials. Now, Goldman Sachs was a different story here. Goldman Sachs still
Was
finished
it?
up, yeah, that still finished up
Why?
near the highs of the session.
Oh, you're saying still the highs. I was
Yeah,
saying they're
yeah.
also all strong to me. I look at these things just from a
All right.
daily, and it's like, holy cow.
All right, let's go into the individual tech wrecks. I saw the Nvidia go down, and basically you
Pick
had
your poison. Pick
I,
a tech stock.
all right. Well, from this, you went to 70 to 95. And then look at those 5, 6, 7 days of consolidation. Man, I wish I would have had this up on my screen. Then it took out the low of the last 7 days, Kaplooey. This thing, I mean, why not go back down to at least to 80 or 70 to fill the gap? I saw Alibaba on your list. I mean, that stock had a nice run too. I mean, look where it came from, 59 and change. That looks like it's going to try and fill a gap here, and 86 handle. What else? What
I
else?
mean, just stop at the Alibaba chart for a second and just go on our tangents. And you know what? You guys love our tangents. Anyways, look at the move in August and September and October. Just take, and just look at the candles. And look how many green candles are in those 2 months. And then look at it in October and November. Look how many red candles are in those 2 months. I mean, the trend is your friend in this market. It's such a trendy market. And if you can identify the turn of the trend very quickly, and we were talking about the Alibaba at 105, that was the bogey. And it tried to hold it back in October, finally took it out, came back up. It was classic support becomes resistance, butted its head up against that 105, 1, 2, 3, 4, 5 days in a row, and then started to collapse back down. And obviously, had a little earnings spike in there, but there was just so much overhead supply near 105, couldn't get back up there on the earnings day, and then has continued to leak ever since. And that's the way these things go. They're hot for a while, and then they're not. And when they're not, they're very not hot, because that has been shellacking here really since 110 down to 89 bucks. And Alibaba starts to get attractive. You start getting back down to that 85 area. That's where it broke out from on the great earnings report. So, and that was a big number too. So, it's another $4.50 lower from there. So you say, well, it's going to take a while to get down there. I don't know. It fell $4 yesterday.
Yeah, it depends on what happens, in the markets today. Also, we had a not so good earnings report in there, so that was a little bit of a driver. And every once in a while, the old accounting issue things come up with Alibaba. You had Singles Day, which was record sales, but that really failed to move the needle as well. But Alibaba really come down since the 110 area.
Just a question from the chat. It's a great question. Valentino's asking, is this retail, when we see the tech wrecks history, is it retail traders that are causing this to happen or institutional? And I'm going to tell you, there's a lot of retail traders out there, and retail is, 12 to 15% of the market. So, they can move, especially on some smaller stocks. But when you start getting the big guns and stuff, it's typically institutional flow that is really moving stocks. I mean, we even talk about high frequency trading. I've said this on the show before. High frequency traders are more noise and more short-term scalping, market making. It's more short-term stuff. The big money has always been, and this has always been the case, institutions have always been your movers and your shakers. When you get somebody coming in like Fidelity and they're selling 1 million shares of Microsoft, it is going to move the price. A few hundred shares from a few hundred or different retail traders that they all get on the same side, but typically you have retail on the other side too. So you got people going both ways with retail. It's not usually always as one directional. But 2 or 3 big players, just deciding I want the hell out, can move price. So, that's the big thing is when you got the big money, you got, $100 million worth of stock coming in. It's going to move the price up. And when they got $100 million worth of stock, coming in to sell, it's going to move the price down. So that's the biggest thing, it's institutional flow that is moving the money.
And just picking up on that, you get the institutional order flow out there, and then with our crafty algos and high frequency traders, they sniff it out. They know that there's big sellers out there. They jump ahead of them. I mean, kind of, I'm not saying there's anything wrong with that. It's kind of back, in the old days when we used to, notice a big seller in a stock or a big buyer in the stock. This a little bit easier to identify back in those days, but we would get in there too, if you could sniff them out. So it just happens. It happens with the institutions. Boom. Then the algos get on it, and then you get the little retail guys getting stopped out of their 100 shares, and it just the ball keeps on rolling.
We're trying to fix the echo on my voice here. Just let me know if it's fixed here now. Spencer's working hard here in the background. Just keeping on with this tech wreck theme, though. We told you a couple stocks. We'll look at Intel yesterday. Intel falling $1.50 yesterday. These are big moves. The other one, Oracle. Oracle typically moves 20 cents a day. Oracle fell $1.50 there yesterday. So there was money flying out of some of these older tech stocks as well. I mean, it was a tech wreck. And the big stream media really wasn't pounding it like that, but there was a lot of tech stocks that really got hurt hard yesterday.
All right, and I saw Apple had a little weakness, did have support at the 110 area, took that out, nice round number, came back above it a few times, but we'll see. 110 will now act as resistance here in Apple.
Okay, jumping over to the earnings parade here. Workday reported earnings last night. Spencer, can you give us the details of their report, and then we're going to break down the trading action for you.
Hold on one second. I was looking. I got 3 shows going on at one time, trying to figure out the echo thing. So hold on one second.
Okay, let's take a 2-minute break.
I got you. Q3 EPS 3 cents versus a 4-cent loss estimate. Revenue of $409.6 million versus a $400 million estimate there. They see their fiscal year 17 revenue at $1.56 to $1. Well, pretty much. I'm sorry. 1.56 to 1.563 billion dollars is the revenue estimate for next year.
Woo!
And the estimate was 1.56, so that was in line. So the Q3 EPS was better, the Q3 revs was better, and the fiscal year revenue guidance was in line.
Yeah, so it's not that bad of a report, but you know what? They reported on the wrong day because they were looking, it's already got hit during the day, and they're looking to hit stocks like this, and it popped up, and everybody said, thank you very much. I'm going to start taking some money off the table. I believe we got up to $86 after hours, which is pretty crazy considering how bad a day Workday had before that. I mean, Workday had traded down to 80, in this tech wreck that we were talking about, and closed at 81.60, and then, it got up to 86, and then they pulled the rug out from under it, and they hit it, and they hit it, and they hit it, and now it's down 10 points, all the way down to $70. Money continuing to fly out of the sector. If you're looking at and Salesforce.com, both of those stocks are down in sympathy. This morning, Salesforce now down at 66.5. Wow, we were just talking about Salesforce.com after a pretty good earnings report, up at $80, and it's been 1, 2, 3, 4. Look at the CRM chart, Joel. 1, 2, 3, 4, 5, 6, 7, like 9 down days out of the last 10 have been red here in CRM,
Wow.
and now you're getting down another $1.50. We're getting right down to that October washout low when they were talking about buying Twitter. There might be a bounce opportunity coming up in the CRM. There's a big level, 66.5.
Wow, you just covered like 2 stocks there. Let me go back to the workday here, and
You gotta fly. We only got so much time.
We shouldn't get so excited about stocks going down, Dennis. It's kind of un-American.
I know it's the bear in us.
69.55. Now the thing about this is there's no bounce, right? Look at this thing. It's just continuing.
Straight down.
New lows on the session, but Dennis, I'm going to step out here, and I'm going to say for a lunch bet, it will close above $69.
Whoa.
Yep.
I'm gonna take you on that.
All right.
Just because, and I think you could be on the right side, but you're giving me such an edge. It's down at 66.40 here right now.
So, I'm looking at Workday. Workday.
No, Salesforce.com.
No, we're just talking Workday here.
Oh no, I'm not taking you on that bet. No.
Oh, okay.
Sorry.
All right. Sorry. Out.
I thought you were a Salesforce. I guess we can't talk 2 stocks at once. That's
yeah, May and June. The only reason I'm saying that, May and June lows both at the $69 level. So keep an eye on that. Salesforce.com. No way. I'm not going to give you an edge like that. Are you crazy? What did the bridge just part or something there? It's 66.28. You're talking about the lows when the Twitter things went on. So let's keep that in mind. Below that, boy, oh boy, Salesforce.com could be going into your mid-60s.
Okay, just talking here, other stocks that reported here last night. We had Ambarella AMBA report, and it popped too originally, and then it dropped as well. Again, tech stocks are just not in favor right now. It matters more on the day you report if you're picking a bad day after the tech wreck, other than the report itself. Anyways, give us the AMBA numbers here, Spencer, and then we'll break it down.
Yep, I got Q3 EPS $1.11 versus a 94-cent estimate. Revenues of 100.5 $1 million versus $97.3 million there. They see Q4 revs at 84 to 87 million versus a $90 million estimate there. So that's not what you want to see.
And it's not what you want to see when the stock is trading down 4 points here in the pre-market. I don't know. What do you think of this one? This one's kind of interesting.
Yeah, you got a low at 56, 58 in the pre-market. Can climb above 58. Those are your early levels. AMBA, the big supplier to GoPro. I don't know.
It does a lot of other things too, though. So, we can say, but GoPro's in so much trouble. That can't be their focus here anymore. I think Ambrella's got obviously, that's one of their biggest customers there, but they've got some other customers too. So, because GoPro looks like it's, did you see GoPro? Couldn't hold a 10.
Yeah.
Now you're looking at under 9. I mean,
Whoa, it got
trouble.
back under 9 yesterday?
Well, not under 9, 975.
Okay.
But it's trading 982. But it just looks like it's like hanging there. I just think it might be actually going to break down here again. GoPro's in trouble.
Well, they went up, or supposedly on some good news, right? That they were cutting jobs or whatever. So
That's supposed to be good news when you're cutting 30% of your workforce or whatever it was. That doesn't sound like that good of news to me.
no, it looks like the hammer falling. Someone mentioned in here about year end, tax selling and consequences. Yeah, there's going to be pressure on these stocks because people.
Great point.
Yeah, people are going to be. Going to be bailing on them. I don't know what they're going to be doing with their winners. That's a whole different thing. But yeah, I mean, a lot of these stocks you got figured. No one's rushing out. No portfolio managers are rushing out to put GoPro in. Seeing in their year-end books. But boy, that's a scary consolidation here. Just the fact that it won't pop looks like you're gonna have a big move coming out of here and.
I mean, that is just a great point you guys are making, and tax loss selling season is going to be coming here, and you look at stock charts like GoPro, you look at stocks like Fitbit here, and you think, man, do I really want to be coming here and buying these things, 3 weeks before everybody's going to be coming here and selling them? I mean, this is seasonality. The week get weaker, at least coming up until you get to those last few days of the year, when obviously, had 3 days settlement and you're in the clear, but I think, there's going to be some downward pressure in the next few weeks probably on these stocks. But, sometimes, funny things happen. These things look weak to me, though. And they look like they're gearing up for the next leg down.
Yeah, for sure. And then as far as taking winners, I mean, I don't, they probably want to keep their winners on the books for the year end.
Let's take a quick 20-second break. I think I figured out the source of the echo, so we'll take a quick break. We'll be back in like less than 20 seconds.
We're back, traders and investors. Benzinga's pre-market prep. A little early break there, but let's cover some more stocks before that big jobs number.
Okay, couple quick earnings stocks here to jump into, and there's about 6 or 7 companies reported last night. If you want to hear one and we don't cover it, let us know. I just want to jump over to Five Below. We had some chat, and we were talking about it yesterday. The $5 dollar store is getting a big pop here in the pre-market. It's up 11%. It's one of your big winners here of the day. Spencer, how were the 5 numbers?
5 numbers. Q3 EPS 10 cents. That was in line with the estimated sales of 199.5 million versus 201.03, so a little below the sales estimates there. They do see Q4 EPS pretty much in line with the estimate, and sales are also in line with the estimate. As far as their fiscal year 16 EPS guidance, that remains in line, and their sales guidance for the fiscal year 2016, it's a little bit lower.
It doesn't look like anything blowing it away from you here from the earnings report. I'm going to say it again. The interpretation on these earnings reports is tricky sometimes. Even if you were an insider, and even if you had that earnings report ahead of time, would you be making 11% on your money here today? I don't even know if you would say it was going to go up on that report. So it's so tricky. It depends on the day of the reporting. It depends on interpretation. And it depends on sentiment towards the company. That's sometimes more of an indicator of where price is going to go than the earnings report itself. And that's crazy, but that's the kind of market we're in, with this crazy market right now. Anyways, Five Below, trading up 11% here in the pre-market. Can't argue with price. It's been trading up there last night, trading up there again here. Joel, give us some numbers.
Well, first of all, congratulations to Larry. I don't know if Larry's in the chat. He was talking about how he liked this one yesterday. Came back, had a nice little gap fill. Larry, let's pay attention. The pre-market high here is coming in just over $45. You got up there a few times and you struggle. Pre-market high 45.20. And Larry, you know I like to go to my longer-term charts and see if there's any kind of confluence there. And what do you know? Going back just a few months here, going back to September, you had a high at 95.49. So that's a sell area. I mean, if you're long coming into this report, considering you trade $38 yesterday, above 45 and a half, maybe sneak into the 46 handle, but boy, oh boy, let's see if you find some sellers at the pre-market high all the way up to 45.49.
Also reporting earnings last night, the gun maker Smith & Wesson, SWHC, trade down 6% here in the pre-market. It's getting scary. It's getting down near those lows that we got to just a couple of weeks ago when we traded down near the 21 handle, into the 21 handle at 21.02. Spencer, numbers, SWHC.
Q2 adjusted EPS 68 cents versus 56 cents. Sales of 233.5 million versus 227.6 million. So a big beat on the sales and the Q2 EPS. As far as Q3 EPS guidance, they see 52 to 57 cents. That's a little lower than the 59-cent estimate. And the sales of 230 to 240 million. That's in line. Fiscal year EPS guidance for 2017 is also in line, and the sales guidance is a little higher for fiscal year 17.
Joel, levels.
All right, you did have the dip, as Dennis mentioned, a big dip here. Pre-market low is at 22 even. Got two lows and a 21 handle we're going to be paying attention to, 21.02 and 21.50. So, man, this thing is volatile. Just seems to come down. It has found support in this range, not only on the dailies, but you can go back on the monthlies here and see this has been a big level as well. So we'll see if buyers step in again here in the $21 handle.
Big Lots reported earnings here this morning. BIG trading up $2.50 in the pre-market. Spencer, what are the details?
Q3 EPS 4 cents versus a 1 penny loss estimate. Revenues of 1.1 billion versus 1.12. So a little bit lower there. Q4 EPS guidance $2.18 to $2.23. $2.21 was the estimate. So right in line there. Not a whole lot to see here.
What are you thinking here, Denny? 53.30, nice pop up
54. Here. I like the 54 as resistance. It's just a big number. But then, you see follow through, and sometimes you take out these levels and they start going. It's such a tough fading market. So, like we're always trying to give you an idea where it turns, but these stocks have so much damn follow through sometimes. I don't know. Like, it's this market. The fade trade is very difficult to play in this market.
I know, but if you bought this a week ago, 10 days ago, in the 53 handle, 53.99 was the high of the move. Currently trading at 53.50. Man, you might be looking to take some. I call it. I don't think you see 50. Well, 54 is only a half buck away. Dennis, here's a lunch bet. Doesn't close over 54.
No, I'm not going with that. I'm the same side, 54, but I'm just saying, just be careful. Starts taking out 54 and starts going higher. Could be a 56 in a heartbeat. These things are funny like
Yeah,
that.
that's the. This one's not too far from its all-time high, folks. Keep that in
No.
mind here. 56.30. That's your all-time high back from August.
828, I'm going to hop off to go trade the
Okay.
jobs number. They're going to try to fix the echo in the background because apparently we still have that. But we got lots of other stocks to talk about. You had a couple big ratings changes here. You got Starbucks with Schultz stepping
Oh, we didn't
down,
even
General
mention
Motors,
that.
Ford.
I was
You
gonna,
guys going to be busy here for a few
I
minutes.
was gonna bring that up. I didn't think we mentioned Starbucks. We were talking about it on the pre-market show. But I think we forgot to bring it up on.
You know why?
On
Because
the
that's
actual
like
show.
such old news. That happened yesterday after the close.
Yeah.
We're in the now. We're trading the
Yeah.
pre-market. We want things that are relevant now. But give us a Starbucks news about
Well,
Howard Schultz.
the one thing, I mean, it's old. You're right. It's old news now. Howard Schultz is stepping down. He's not leaving the company. He's staying on as executive chairman, whatever that means. But he'll be in charge of social issues and there's a couple other things he's going to stay. Innovation. There's a couple of small things that he's going to be in charge of. But one thing I want to know was like the stock price dropped obviously, but the new man in charge, Kevin Johnson, has previously worked at Microsoft and Juniper. So that sounds good to me. Two tech companies. Starbucks. Part of what sets them apart is their technology. So I like that. Real quick, jobs number 1 minute non-farm estimates. We're looking for 175,000 versus 161,000 in October. Private, we're looking for 165,000 versus 142 in October. The unemployment rate is expected to be 4.9%, which will be unchanged. So that's what we're looking for at 8:30, coming just up here in under a minute.
Yeah, for you Starbucks followers, I'm just, I'm not going to make any, rash decisions here on that price movement. But yesterday's close, 58.51. If the street has confidence in the new leader, this thing will be back over 58.51, trading into 60 handle, trading down now. But that's going to be good resistance for now. S&Ps have had a creeper rally here. Just ahead of the jobs number. We made a low at 84 and a quarter, a buck and a half off the high of the day. Getting a little volatility here. Jobs report imminent, as they would say on CNBC. Trading down 350. We didn't get much action off those.
We got him. Non-farm payrolls for November: 178,000 versus 175,000. Like I said, the prior was 161. Private payrolls for November: 156,000 versus 165. Estimate prior is 142. Unemployment rate for November: 4.6% versus the 4.9%, which was the prior and the estimate. So unemployment rate lower than expected.
And I hope Dennis didn't fall asleep during this unemployment number here, because we have moved not even a point. We were trading at 88.5 here, so no reaction. And this is the second time in a row that the jobs number has just been a dud here. Let's keep an eye on the price action. It may change in any second here, but haven't made a new high, haven't made a new low. Let's go to a minute chart here. I don't do that very often here on the show. Oh, I guess you did get a little bit of volatility. That's a minute chart. You did a spike down to 87 to 90, but still trading right in the middle of that range. So market seems very, very unfazed by the job number, confirming perhaps an interest rate hike in December. What it forecasts for the rest of the year, who knows? As Spencer said, non-farm payrolls at 178, just above the estimate. Unemployment rate, 4.6% versus 4.9. Is that the low? Have we ever been that low before? 4.6%?
I'm looking at that right now, actually. That's what caught my eye. So that's what I'm looking at right now, because I wonder. I had that same question as you, Joel. Have we ever been that low?
Great minds think alike here. So, man, unemployment rate down. I mean, of course, you're always going to get your naysayers out there saying, how many people just dropped out of the job market and really, are not figured in this? But whatever you have here, folks, you have a quiet session so far. Moved less than 2 points.
Do you want to add, though, this is now 74 straight months that jobs have been added. We had 176,000 jobs added. That's
Yep.
74 straight months. That's a record.
All right. Well, hey, it looks good. The economy's looking good. S&P's trying to get green here, and that's when it's going to catch my attention if it could clear the close of 2192. Not much back up there until you get into the 2200 handle. Yesterday's high way up at 2203, so we'll keep an eye on that. Maybe Dennis is getting down and dirty in some trading action, Spencer. So
From Paul Lamonica here on Twitter at Lamonica Buzz, average hourly earnings fell 2.5% growth over the past year. So
so
a little bit of a buzzkill on that one.
from Paul Monica. We'll have to get him on. He hasn't been on in a while. S&P's coming to life here though. Now only down a buck and a quarter, down a buck, trying to get green on the session. So doesn't look like the market is minding this report at all. Financials, I mean, they haven't really reacted. Bank of America still trading down 14 cents. Apple coming back to unchanged. I mean, I am just looking at my screen here, and there's just not a lot of stuff lighting up here. Twitter up 7 cents. Spencer, you want to cover one or two stocks here? And labor participation rate still only 62.7%. That's coming from Phil.
Yeah, we can cover a stock or two before our guest at 8:35. There was a couple ratings like Dennis said, not too many, pretty quiet today on the ratings front, but a couple that we wanted to note. Going through my list here, we had Bank of America upgrading J.C. Penney to a buy. We can look at that guy.
JC Penny, getting a nice bounce off this. Looking at the 1 minute chart, let me go to the daily chart here. $10. That's the line in the sand there. We hit that 5 days ago. Also hit it back in early November. Was resistance in September, as October as well. So let's see what J.C. Penney can do at the $10 level. All right, folks, we're going to take a break here, and we're going to bring on Shailesh Kumar. He's the owner and portfolio manager of the Value Stock Guide. We'll be talking value stocks in just a minute.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanah, along with Dennis Dick and Spencer Israel. We have Shailesh Kumar on the line. He's the owner and portfolio manager of the Value Stock Guide. How you doing today, Mr. Kumar?
I'm doing great. How are you guys?
We're doing good here. We're hoping for a little bit more action off the jobs number, but not seeming to get that. But let's just go into just briefly your background here and how you ended up focusing on value stocks.
Oh, I've been an investor for a long time, but I was in the corporate America. I was working as a management consultant for Eddie Carney for a few years. Then we did a startup over there, and I was the CFO for some time. I quit there, and then I started my own business in manufacturing back here in Detroit. And 2008, 2009, I had to close it down because the economy suddenly exploded. And so I decided to go back to investing because I've been doing that for some time, and I've been doing pretty good. And that's something that's one of my passions. I started offering the service in 2011, and that has done really well so far, so I'm happy.
All
and it
right.
has been working out.
You're a classic value investor in the Ben Graham mold. Did you come that after processes of elimination, or is that just something that your first book or first person you were, or first theories you were introduced to? How did you come back following Mr. Graham's ideas?
Oh no, I started investing back in, gosh, I think about 1995, and pretty much like everybody else, I was just feeling my way through this whole investing jungle, and I didn't really know any better. So I made a lot of mistakes. At some point, I started reading a lot of uh, material on investing, and Ben Graham actually made sense to me. There's a real uh, basis for what he says, how it works. And so I started using that in my investments, and they worked out really well. And over time, I just grew into it.
So to walk us through your investment process on the value side, do you rule out certain stocks or certain sectors just based on their PEs or their revenue models? How do you break down what you follow?
Well, the first thing, of course, is that I only go in a sector or an industry that I can understand. So, for example, for biotech, I'm really not very confident in biotech and my understanding of how the industry works. Uh, and a lot of times, a biotech stock seems to be much more like an option where, it's kind of, if something works out, if FDA approval comes through, then you probably have a 200, 300% return in the blink of an eye. If it doesn't, then, you just lose a bunch of money. And I don't think I can bring anything to the table in that area. Um, my bread and butter is actually going through the balance sheet, understanding the assets, understanding the uh, core strength of the company, the market, and so on and so forth. And remember, I said I come from a management consulting background, and so I have a lot of background into doing market research. I have a lot of background into operations, and so on and so forth. And I use that quite a bit when I look into my investments. I do use your typical PE ratios and price to book ratios, etc. to when in the beginning when I'm shortlisting possible investment candidates. But eventually, you do have to get down into the details and learn the business of the company that you're looking to buy.
Do you have an accounting background that enables you to look at those balance sheets, or do you just kind of pick up the trick of the trade?
Well, a lot of things you learn. I do have an MBA, so that gives me a basic understanding, so I can uh, pull up the accounts and I can look at the numbers and, I can understand pretty much most of it. But once you have been in the investment field for some time, you kind of start picking up all these little trends here and there and, those patterns which make you sit up and say, oh, I need to look into this a little bit more deeply to see what's going on there.
All right,
But yeah, you learn on the job. Yeah.
coming out of the chat here, question from Violin Maker: do you use technical analysis in your value approach, or do you only stick with the fundamentals?
Typically, it's only fundamentals. I do not use technical approach at all.
Not at all. Not for looking for entry points or exit points or things like that. You don't. If we came in your office right now, you don't have any charts up anywhere.
I don't have any charts up anywhere.
All right.
Absolutely.
Good. Okay. All right. So let's move on. Let's talk. Let's talk about value stocks, and let's talk. Some things that you have in your issues you have in your portfolio right now, and how they're looking going into the year end.
Okay. Uh, so the last couple of years, I've been focusing mostly on commodities and energy as well. Typically, one of the things when you look into cyclical industries like this is that you can kind of figure out that we are in a down cycle, and the cycles are pretty much very reliable, right? Because it all works based on the demand and supply principle. And so you know pretty much that we are in a down cycle. You just don't know where the bottom is. So what we started doing is last year we started building up positions in commodity stocks as well as in energy stocks. And so we've just been adding as, we see the stocks go down and down and down, and we keep adding because we know eventually it will turn back up. And we even though we are investing in cycles, we actually do the fundamental analysis to figure out which companies are more appropriate to put your money into. And that's the whole valuation process.
All right, so let's talk about
So,
some of these oil stocks because nice, nice rally in the crude oil complex here off the OPEC deal here. Are you
right.
factoring that the price of oil here when you're doing your evaluation of the energy stocks?
Right. So one of the things I said is, okay, I have this company that I own. And so the first thing I said, okay, this is last year, right? So when the price of oil was like in 30s. And so I had to figure out at what point this company is profitable. And so for this company that we own, this is a Canadian oil company, and and when I ran my models, it was about $36, $37 that this company is profitable. And so they were kind of losing money a little bit, but they had a very good financial strength. They had zero debt and they had a ton of cash on their balance sheet. And normally you see these companies that come into downturn with a lot of cash on the balance sheet. They actually buy distressed assets and they start expanding because they can, and the other companies are actually suffering.
Do you have a
So this
symbol
is
for
what
that
is.
stock? Do you have a U.S. symbol?
Oh,
Yeah, a U.S. symbol for
yes,
that stock?
yes, it's a GTE, Gantiera.
Okay, I got it. I just wanted to get the chart up. Okay, all right. That's a
All right, so
lower price stock.
yeah, yeah, it's a low price stock, and we started buying this last year at about $2.17 or something. So it's close to $3 now, I think,
Yep, two ninety
which
one.
is yeah, which is already a pretty good profit. But it's actually going to be a bigger stock just because of all the acquisitions they've done the last year. They have actually acquired a lot of new capacity, new wells that will be coming online in 2017. And guess what? They're coming online when the price of oil is up already next year. So I think pretty highly of this company
All
going
right. Is
forward.
there any? Do you have targets on these, or when you buy something, you just keep it in there forever?
No, I do every stock that I buy. I do want to know at what price I want to sell. And for Grantier, I'm looking at $8 per share.
Okay. Anything you're looking to add to your portfolio here, or something that been looking at, maybe a nice sell off or something, and looking for some opportunity. Anything that might, be hurt a little bit by year end tech selling.
Well, it's kind of a strange market nowadays. You know, yeah, we have small caps doing quite well, and I mostly invest in small caps. So, but again, when you look at the valuations, they're not really very cheap right now. So we are currently about 25% in cash, just because the market, yeah, it may be attractive, and we have all this tailwind from the new president may bring in a lot of new growth, uh, but the valuations are not very cheap right now. So I'm just sitting on cash for a while.
Okay. All right. We've been on the line with Shailesh Kumar, owner and portfolio manager of the Value Stock Guide. Thanks for coming on. We'll talk to you again soon.
Thank you, Joe.
All
My
right.
pleasure. Bye.
All right, Spencer. 8:46 here. Let's continue on. Dennis is having that echo here,
I'm
so
here so we can test me once again and see if the echo's on my voice. Sorry, we apologize for the technical difficulties here. Hopefully, you can hear me clear. If you can't, let me know and we'll figure something out. But let me know how I sound now. Just jumping into imbalances here. Bank of America, 173,000 to buy.
Hmm.
That's interesting here because it's trading down a lot of your financials. So just recapping what has happened since the jobs number. Not much, I would say. It's just a continuation of the moves we were seeing prior to the jobs numbers. So I'm looking, at the financials trading weak here in the pre-market, despite seeing a few buy imbalances in there. I'm also seeing the utility stocks trade a little bit higher. Some of the defensive names trade a little bit higher there. So it's basically just continuation of what we saw before the jobs number.
All right. S&P's trading down 4.5 here, 2187.50. Dennis, you did you see any big movement in any stocks? In particular,
No,
I mean,
no,
no.
it was quiet. I mean, the S&P's bounced up a couple points, sold off a couple points. It was a yawner, really. There wasn't really even that many opportunities to trade because there really wasn't much moving off of this jobs number.
Okay, all right. We've covered some of the upgrades and the downgrades, the earnings for
Did you
today.
catch? Did you cover the Lululemon?
No, we didn't. Why don't we go to
Go
Lululemon?
back to Lululemon, downgraded here by Canaccord to sell this morning.
Hmm.
LU is trading down a buck and a half here in the pre-market. Closed at 56.53, and this is a fall from grace here too. Everybody back in the summer, love Lululemon again. The yoga pants up at $80 a share, and since then it has been straight down. An awful quarter for Lululemon, or an awful 3 months, going from $80 down to 56 bucks, now 55 here this morning with the downgrade to sell. I feel like it's a little bit late to the party here. Lots of support down here at 55. Needs to hold. I would say that absolute low, which we made at $54 back on the 25th. That needs to hold. Below that, it starts to look ugly again.
Yeah, nice trading range as of late between 55 and 59. Looks to be breaking out of the bottom of that trading range here. 54 even is the number Dennis is talking about. 54 even was your low back in October. Also, back in February, you bottomed out in that level. Below that, we could be looking at the January yearly low of 52.71. And also, Alta earnings,
Yeah, Bob
ULTA.
Wire asking about it.
Do we have the numbers?
ULTA, Spencer, you got those numbers?
Dude had those numbers for you. ULTA did report earlier today. They had a nice. I'm sorry, this is yesterday. Q3 EPS of a buck 40 versus a buck 37. Sales of 1.131 billion versus 1.11 billion dollars. The Q4 EPS $2.08 to $2.13. 205 was the estimate. So nice beat there. As far as sales, that's about in line. They also raised their fiscal year 16 guidance, and they see comps up 13 to 15%. EPS growth is in the high 20% range.
Nice lift here, 278. You're looking at your all-time high back on the 24th of August. What's the after-hours high there, Joel?
Let's go to the after hours chart trading up. Man, this thing really moves off earnings. I wonder if they always price the options into it, but let's just go right to the pre market action. The reaction off the number, you got a pre market high of 274.76. And you know what? You've hit that on three different occasions. So there you go. Someone trying to wiggle out at the 275 level. I call that major resistance. Dennis, you mentioned the all-time high of 278.63, but looks like someone wants to get rid of a little stock here at 275 area before that happens.
Yeah, so and you're rallying in here in a market, it's hard to say. I would say that 278 is the bogey, but if that can hold, then obviously, if that can hold, then you look and think, okay, well maybe it's going to give back some of this, but I don't even know if it's going to get there to test that. Now we're looking at 270 here. We're seeing more sellers come in here, so
Yeah.
stock up 13 points here was a little bit weak yesterday. I think there's going to be some profit taking here.
All right, and S&Ps are leaking a little bit here. I think when they didn't get that pop and get green on the session, making me lean a little bit more here to the downside. The pre-market low is 84 and a quarter. After that, things are kind of light as far as support. You have your 8-day low down at 2178.50. So far, the buy the dippers have not come in as of yet.
We didn't talk GM and Ford today, did we?
No,
We
we didn't.
mentioned them, but let's jump into the details here. We talked about Ford yesterday, and I actually said I was starting to like it here around 12 bucks, especially because GM has just started to run. Well, they played catch up with Ford yesterday. It ran way more than I thought it could run. It ran up to 1280 yesterday. Close at 1243 is trading flat here right now with the overall market there, but that was an incredible run. And the stock's starting to show some love here as well. General Motors also, huge bar yesterday, huge green candle, running all the way up into the high 36s before settling 36.43. Pulling back a little bit here this morning, there's a sell imbalance of 133,000 shares, but that's just not putting that
Big
much pressure on the
move.
stock.
Big,
Big
big.
moves.
Yeah. Wow. 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 It's like, are they a financial stock or something? Did you?
It's just once things start going, man, and it's a legacy value. We just had a value investor on right now. Value stocks have come back in favor. I mean, if you start looking, at all the companies that have really taken off since Trump has come in, a lot of them you would classify more as a value stock than a growth stock. So, the financials, definitely looking at those from a value perspective. You look at stocks like Ford and GM, those are more value stocks. So there's, and then you look at stocks like Facebook, Netflix, those are growth stocks, and they've been hitting those. So, I mean, there is this, trend here since Trump has got in to like value more than growth, which I like as well because my portfolio is littered with value stocks.
Right, and Facebook's coming. Let's talk about Facebook here. Trading down 38 cents here trade down 16 cents in the pre-market and 114.94. We got a big level here in Facebook, and I don't know. We dipped down here. This is going to be the fourth crack at this area. The recent
Yeah.
low. Ooh, boy, this is bad here. 113.55. I know that got hit on some of the advertising. Calculations. You had 1355 as a low, then you had 1421 as a low. Yesterday's low at 14 even. So 114, that's a big level, and it's the fourth time down a weak market here. Maybe we can make some money whacking it going through 114. Also, let's take a look. What other was a tech stock that was weak yesterday? Intel.
Netflix was weak, but it popped back. So Netflix was interesting because at one time it was down under 115, and then it closed up at 117.22. But what do you think? Netflix, you look at the Google, and Google got murdered there yesterday, and you look at the Facebook and got hit pretty hard there. Amazon was down like 15 points again. It's been a rough 4 or 5 day slide here for Amazon, but Netflix has held up relatively well. I mean, we're kind of where we were a week ago here. What do you make of that? Do you think this is something it's that's resilient here, and you want to own this thing, or do you think eventually they're just going to whack this one?
I mean, I never want to own it. I mean, it's just the way I look at different issues. I'd say 120. Is that hit that 2 days ago? 120.37. I'd say it's more likely to maybe if the market goes in reverse as well. 110.68's been holding things up, but after that, there's a big gap to fill from the earnings all the way down to 100.73. So it just kind of looks like it's getting a little bit tired after that big rally after earnings and looking kind of backing in and filling, as we would say.
Let's talk a few oil stocks just before we end the show here.
I was just going to bring up Sunoco, actually, Dennis. Sunoco
Yeah, go ahead.
Just issued some new guidance for Q4. So when they reported in October, their Q4 EPS was 60 to 65 cents. As of a few minutes ago, it's now 95 cents to $1.04. Their fiscal year 16 EPS is 268 to 278. 274 was the estimate, so an updated guidance. I mean, to be expected, I guess, with the OPEC decision, but notable nonetheless.
All right. Let's see here. Sunoco, SUN, stopped at a few of those gas stations on my way to New Jersey and back, trading up 48 cents. Big bar yesterday. Not a huge reaction. $25 is an important level. You snuck a little bit through it yesterday to 25.49, but still a series of highs just right at the $25 level. So until we can get a sustain a few closes over $25 here, still looks like a little bit of a downtrend here still in Sunoco. Boy, this thing has come down a long way since it was back up at $59.99 back in August of 2014.
I mean, this does not look like an oil stock chart whatsoever when you look at Sunoco. And I don't know what's happening with it, because I don't follow this company specifically here. But I mean, most of your oil stocks are breaking out to new highs or at least, showing some strength there. This one's not, so I have no idea what's going on there, but that's just doesn't look like an oil stock to me, which it is, obviously. Halliburton, has been hot. Schlumberger's been hot. Chevron's breaking out to, like a Chevron, almost up to 115 yesterday. Big seller up at 115, but you got to go to the monthlies on Chevron. I mean, we're getting back to prices that were in 2014, and we're, within 17 points, 16 points of an all-time high on Chevron, which is kind of crazy when you consider oil used to be $150. Now we're still sitting here at 50, and we're talking about stocks that are, well, I guess it's not within striking distance, but do you think this oil rally and some of these individual oil stocks a little bit overdone?
I'm going to do a little research here over the weekend. I'd still like to find out. I mean, the OPEC, they come out with these numbers. They say they're cutting production. I got to figure out the best way to actually, to track that. I guess it's with the inventory numbers and what comes online, but they said what they're going to do. I guess we've got to figure out a way to track that to see if there's actually any cheating going on. All right, Dennis, final wrap up here for the day, for the week. S&P futures are basically where they were at when the jobs number came out at 2188.75. I don't think you get real excited on the upside here until you go green in the futures, and that would be above 2192.
Yeah, I'm just looking. You are seeing a little bit of strength here in the financials, a little bit of weakness in the financials, but a little bit of strength here in the last few minutes. So we were weak coming in the jobs number. We're a little weak after the jobs number. They're starting to show a little bit more life here. Bank of America is now only down 10 cents, clawing its way back once again. I mean, these seem like you can't keep these financials down. Gold was trading down almost $2 this morning. It's only down 70 cents here now. So you're starting to see money already, even before the market opens, starts to flow back into the sectors that have been strong. And if you look, the bonds were way up this morning. The bonds are not up. If you look at the TLT, it's not up near significantly off the pre-market highs. And also the XLU. XLU was at one time trading up about 1%, and now we're only up 0.17%. So you've seen, some money flowing back, and it seems like the trend is your friend on some of this stuff. And I don't know, eventually these trends are going to be broken, but wow, you got to respect the relative strength here in the financials overall.
All right, Spencer, let's wrap things up and give us a preview for next week.
Next week, notable guests include Kenny Glick. We love him. Also, Tobias Carlisle will be stopping by. He hasn't been on the show for several years now. He is the principal at Equum Investment Management, a value investment firm in Santa Monica, California. If you missed any part of today's show, catch the whole thing again on our podcast. We're on iTunes, SoundCloud, and Stitcher. Plus, the show is on YouTube live, or YouTube pretty much right after we are done here live. So you can also check that out there. If you want a free trial of Benzinga Pro, or you just want to learn more about it, it's Benzinga's real-time news platform. You can call us up at 313-723-2000, or you can go online at pro.benzinga.com. It's a great source of real-time headlines and stories, including PRs, SEC filings, earnings, rumors, and also our exclusive headlines that we break from our news desk. So you check all that out. Again, pro.benzinga.com, or call us up at 313-723-2000. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Hope everybody has had a good week so far. Hope you have a good rest of your day and a good weekend. And we'll be back with you, Echo Free, on Monday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.